The stock market just crashed. Your portfolio is red, your stomach is in knots, and every headline says it's going to get worse. What do you actually do right now? Your brain is screaming, sell everything, hide your money under the mattress, and wait for things to calm down. And that instinct feels totally logical. But it is the worst thing you can do. Every single market crash in modern history, 2008, 2020, 2022, has fully recovered. Every one. The market has never gone to zero and stayed there. History is on your side. Today, we are going to cover 4 things: why panic selling destroys your wealth, what dollar cost averaging is, the 4 steps to take right now, and where to put your money during a crash. Here is what panic selling actually does. You sell low, locking in your losses for good. Then the market recovers. Without you, you miss the entire rebound and your wealth never comes back. Studies show investors who sold during the 2020 COVID crash and tried to time their re-entry earned 43% less over 5 years than those who simply did nothing and held on. Here is the brutal truth: the 10 best trade days in stock market during or right after crashes. If you are out of the market on those 10 days, your long-term returns get cut almost in half. The right move during a crash is almost always nothing. Stay calm, stay invested, and do not touch your long-term portfolio. Boring wins in investing, panic loses. Wow, 30% off S&P 500 shares. Think about it this way. If your favorite store suddenly put everything on sale 30% off, would you run away? Or would you buy more? A market crash is a sale in the entire stock market. Now let me introduce you to the strategy that makes market crashes work in your favor. It is called dollar cost averaging, and it is the most powerful beginner investing strategy ever created. Dollar cost averaging means investing a fixed amount of money at regular intervals, say $200 every month. No matter what the market is doing, up, down, sideways, you invest the same amount every single time.
Here is the magic. When prices are high, your $200 buys fewer shares. When prices crash, your $200 buys many more shares at the discount. You automatically buy more when things are cheap.
Over time, dollar cost averaging lowers your average cost per share. That means when the market recovers, and it always does, you have more shares at a lower average price, and your gains are much bigger. Real example: invest $200 per month for a year during a crash. Market drops 30%, then recovers fully. Because you bought more shares during the crash, even though the market just broke even. Okay, here are your 4 action steps for right now. Step 1, check your emergency fund. Do you have 3 to 6 months of living expenses in a high-yield savings account? If not, build that first before anything else. In March, when flip 5 tires silk, that is where your emergency fund lives, earning real money while protecting you from being forced to sell investments at the worst possible time. Step 2, if you carry high-interest credit card debt above 10% interest, pay that down before investing more. There is no investment that reliably beats paying off 24% interest guaranteed. Debt payoff is your safest investment. Step 3, continue your regular investments. During a crash, keep your monthly contributions going into broad index funds, things like VUO, VTI, or your 401k. These are the most proven crash recovery investments in history. A crash in the US market hurts less if you also hold international bonds or dividend ETFs. Diversification does not eliminate losses, but it stops any single crash from wiping you out completely. Let me show you history really fast. The S&P 500 has survived 2 world wars, the Great Depression, the 2008 financial crisis, global pandemic, and every geopolitical shock, and made new highs. The 2020 COVID crash was the fastest bear market in history. The S&P fell 34% in 23 days, but it also had the fastest recovery ever. By August 2020, the market had already made a new all-time high. 5 months later, the investor who kept putting in $200 a month through the entire 2020 crash came out ahead. The one who panic sold and waited different results just because of the decision to keep going. Wealth is not built in good times only. It is built consistently, month after month, year after year after year, regardless of what the headlines say. The crash is just a month of cheaper bricks. Keep building. Zoom out. Whatever the market is doing today feels enormous right now. But on a 30-year chart, every crash looks like a tiny dip on the way to a much higher point. Perspective is everything in investing. Be famous or greedy, and greedy when others are fearful. Right now, everyone is fearful. That means smart long-term investors are quietly loading up at discounted prices. Here is another perspective. If you are in your 20s or 30s, a market crash is genuinely good news for you. It means you get to buy decades worth of future growth at a discount right now, while you still have time for it to compound. Numbers do not lie. Simulation studies show that investors who maintained out the crash years than those who paused investing until the market felt safe again. The single best investing habit is automation. Set up automatic monthly contributions to your index fund or 401k. When it's automatic, you remove emotion. The market can crash and your investment still goes in. When the market crashes, do not your emergency fund. Keep your monthly investments going, stay diversified, and zoom out on your time horizon. 4 steps. That is all it takes. Your crash action plan. 1. Make sure you have an emergency fund and a high-yield account. 2. Pay down high-interest debt first. 3. Automate your monthly index fund contributions. 4. Diversify across markets. Done. Simple, powerful. One final thought. Turn off the financial news during a crash. Seriously, the news is designed to make you feel like you need to act right now. Long-term investing rewards patience, not reaction. Noise is the enemy of returns. Every crash feels permanent while you are in it. Every single one has been temporary. The stock market has recovered 100% of the time throughout all of modern history. It will recover from this one too. It always does. If this video helped you feel less scared about the market right now, drop a comment and tell me what your plan is. Subscribe so you get the next video on dollar cost averaging with real numbers every beginner investor needs to see. See you there. Wealth is built one consistent decision at a time. Today's crash is tomorrow's discount. Keep going.